European Central Bank is set to start a quantitative easing program that will see it inject 60 billion euros into the EU's economy starting in March. Why should this all matter to you? We'll be exploring the value of this monetary alchemy, according to some, live from London and right here in East Africa. But that's not the only thing on the menu. Here's what else is coming up. Turkey's betting big on Somalia's recovery. Will be live in Mogadishu. And all for cash, Egypt will be taking world consignments in order to settle Iraqi debts. Now then, let's start with Egypt. It has signed an agreement with Iraq that will see it repay a $1.7 billion debt. Now that debt, of course, arose from the losses Egypt suffered in terms of jobs for its citizens and businesses during Iraq's invasion of Kuwait under Saddam Hussein. After years of negotiations over the dues, the matter now seems to have been decisively settled. Here's Yasser Kim with more details from Cairo.
The debt goes way back to 1990. After Iraq's invasion of Kuwait, nearly 1 million Egyptian expats lost their jobs because of the war, and a deal was struck then for Iraq to pay compensation to the workers. Unable to pay, Iraq wanted to apply the Paris Club Agreement. It calls for debtors to forego 50% or all of the debt on Iraq.
Egypt refused, saying that it was the lifetime savings of Egyptian workers and it couldn't be cancelled. They also owed money to Egyptian companies that traded on the UN Oil for Food program during that time.
The international embargo and the internal strife prevented Iraq from paying its dues. Egypt, with its own economic crisis, needs the money. After years of tough negotiations, Egypt agreed to receive the $1.7 billion in the form of oil supplies.
I believe this is a good deal for both sides. It's an alternative to cash, and for Egypt the oil now is at a low price, so it will guarantee more shipments and oil supplies than before.
When concluded, this deal will bring an end to a sticky issue. Both sides also agreed that Egyptian companies will have a priority in the new projects to rebuild Iraq. Yasser Hakim for CCTV, Cairo.
Let's head over to Europe now. Bundesbank President Jens Weidmann, a fierce critic of the European Central Bank's quantitative easing program, says he has doubts about the effectiveness of the bond buying plan set forth from March. Now, Weidmann is on the ECB's governing council. He voted against the move and said the sluggish growth in Europe is largely due to a combination of high levels of debt and a lack of competitiveness in some individual countries. The ECB announced last week that it was launching a government bond buying program to pump hundreds of billions of new money into a sagging Eurozone economy. Now, Weidmann has reiterated that the bond buying decision is, quote, not a normal instrument of monetary policy, end of quote, because it contained disadvantages and risks for the currency union. Now, by the time the European Central Bank is done with its quantitative easing program in September next year, it will have injected over €1 trillion into the monetary system. However, if you're a policymaker or an exporter in sub-Saharan Africa and Europeans are your main clients, at the end of the day, you're going to be asking one question. Why should you care? What does this mean to you? That's a question I put earlier today to Ali Kansachu, CEO of Rich Management.
QE is essentially when a government starts to print money. Typically, it's actually a money printing exercise. Zimbabwe tried it, didn't work out. The US has tried it and successfully is now exiting its QE program, and the ECB has just started. So what they're doing is they're printing money, they're trying to give the patient some kind of economic shock therapy, so people get out there, they start spending, banks start lending. It's meant to it's meant to oil the wheels of finance, as it were.
Why should Africans care? I mean, this is happening in Europe. It was brilliant when the Americans pulled it off. A weaker dollar certainly did help some of us around here, but this is the euro we're talking about. Why should anyone care, especially if they're in sub-Saharan Africa?
This quantitative easing program is going to weaken the euro quite tremendously. The euro has been tumbling. It's down about 7 or 8% already this year. So the market's reacting because it's seeing that there's going to be more paper, more fiat currency, and saying, hang on a second, we have to devalue the currency. And for somewhere like Kenya, where we're exporting into European markets, where a lot of European tourists are coming here, it's going to have a very big impact because the euro is going to be worth considerably less. All these folks who've planned conversions much higher up are actually going to find there's going to be far less money in the kitty, you know, for flower sales or whatever they might be doing into Europe.
But couldn't the argument be made that these guys would essentially just be able to switch from euros to dollars? I mean, that essentially would give them quite the gain in shilling terms.
Well, that's an interesting question. Well, unfortunately, you know, our operators in Africa are not as sophisticated as that. For example, why is Nigeria, Angola, and South Sudan struggling at below $50 a barrel? Why didn't they hedge? You could have sold oil forward at $100 for practically 3 years. Not a single African country did that. American shale drillers did that big time. That's why they're still standing, because they're still selling at very high prices. So I completely agree with you that that's something we've got to look at, the degree of sophistication. And you're right. I think there's an increasing demand curve around companies, around governments seeking to be more sophisticated.
Germany, the UK, lots of European countries tend to be our key source market. A weaker euro essentially cuts their purchasing power.
Correct.
Tourism will
Our
take a hit.
holidays have become 25%, are potentially going to be 25% more expensive. And in a very competitive marketplace, 25% is a lot of money. So
Because then you've got Kenya, Tanzania, South Africa. In a situation where you've got lower purchasing power, the odds are you probably won't want to fly out 3,000 miles away.
That's right, when you can probably holiday in Europe at a considerably less cost and enjoy yourself tremendously. So I think, yes, it's going to mean trouble in part for some of the African tourism markets because it's going to prove very expensive for Europeans to come this way over the next 12 to 18 months.
The last time QE was in effect, around QE3, bond yields essentially was shoved down very aggressively, and that essentially created this search for yield that benefited African sovereign issuers quite a bit. Should we expect the same effect this time around?
So, I mean, the effect of that was felt in Africa. For example, we sold $2.75 billion worth of Euro bonds. If you'd ever given anyone that number at the beginning of the year, they would have thought you were insane. So that's a classic example of that liquidity coming as far as our shores. However, this year, what I've seen is, you are right, there is a bit more breathing space, but there's been a massive volatility within sub-Saharan African credits. It's not difficult to work out why. Nigeria, for example, we used to trade below Kenya, is now trading 100 basis points over. So we've seen a trend change.
And that's entirely driven by oil volatility.
Absolutely.
And the Nile.
It's very simple. Until oil stabilizes, all these countries from Venezuela to Russia, Angola, Nigeria, you name it, South Sudan, they're all a sell. That's the point. And there's no sign yet of the oil price stabilizing. So yes, I agree with you on a macro scale, it's going to give some breathing room. But within what we've seen in the last few weeks, of course, has been some very dramatic movements driven by this extraordinary collapse in the price of oil, largely engineered, in my view, by President Barack Obama, the oil and currency war specialist.
That's quantitative easing from an East African perspective, at least with regard to the ECB. Let's get a European perspective on this now. Melanie Ralph is live in London with more data. Melanie, a lot of economists, especially those based in the EU, have pointed out that this QE program is not the silver bullet solution for what actually ails the Eurozone. But that said, does it give EU states some fiscal room, some time to implement the structural reforms that they need?
Yeah, well, ECB quantitative easing will affect the economy in many ways. It improves liquidity, bank lending, interest rates and asset prices, but the most important outcome is the impact it has on confidence and expectations. That in turn lowers real interest rates, which makes investment more attractive and should thus boost growth. However, some analysts say the growth impact on the economies will be temporary, with countries who have unresolved structural issues such as France and Italy risk experiencing no more than modest relief if they fail to pursue further structural reforms.
Indeed. To what extent can the euro being at parity with the dollar, even weaker than the dollar, as some expect it to be, resolve this problem of deflation?
Well, it certainly helps. Some analysts say it will add between 0.2 and 0.3% to the inflation picture. In the past, the strength of the euro has depressed import prices and forced Eurozone companies to keep prices down to be competitive at home and abroad. Cheapening the euro is an important boost for Eurozone countries such as Spain, Italy and France that have very large fiscal deficits. A more competitive euro will strengthen demand in all the Eurozone countries by increasing exports and causing domestic buyers to substitute local goods and services for imports. A positive ECB attitude about a declining euro in the context of raising the inflation rate will allow financial markets to achieve the goal of fiscal consolidation.
Indeed, we'll have to leave there for the time being. That's Melanie Ralph live in London. Now let's move on to a combination of trade and monetary policy, but also fiscal policy as well. Turkey's president was in Somalia for the second time since 2011 on Sunday. While there, he launched several infrastructure projects during his visit. One of the key ones include the construction of a new terminal at the Aden Abdullah International Airport in the capital, Mogadishu. Somalia's President Hassan Sheikh Mahmoud lauded Turkey for investing in Somalia despite the insecurity in the country. Somalia's authorities are currently fighting an Islamist insurgency waged by Al-Shabaab, an Al-Qaeda affiliate. On the 22nd of January, 3 people died when a suicide bomber detonated explosives at a hotel where the Turkish president's advance party was staying. No Turks were injured in that incident, which Al-Shabaab claimed responsibility for. President Erdogan's visit to Somalia ended his Horn of Africa tour, which also saw him visit Ethiopia and Djibouti earlier in the week.
You have provided this terminal many other things, including moral support. Somalis will always remember your generosity.
I'm very happy and delighted to inaugurate the new terminal of Mogadishu's airport. I think it will help the Somali people who used to experience difficulties.
On behalf of the African Union, I would like to congratulate the federal government of Somalia on this very exciting day when we are getting a brand new state-of-the-art terminal for our international travel and airport, but also congratulate African Union and again Somalia that it has been done in a very peaceful environment. Everybody is happy and we will be seeing these many developments come to Somalia.
Mohammed Hirmoge is live in Mogadishu with more data on this particular visit, its goals, its objective for us. Mohammed, let's start with the January 22nd suicide bombing at the hotel where the Somali and the Turkish delegations were meeting. Who was the target in that attack? Was it the Somali officials or their Turkish counterparts?
Well, Ramadan was an attack that was claimed by Al-Shabaab, and of course, whereas both the Somali and Turkish officials might have been the targets for that particular attack, it's pretty clear, given the timing, it was 22nd, and the President Erdogan was scheduled to arrive on 23rd before getting cancelled to attend the funeral of King Abdullah of Saudi Arabia. Given that timing, given the proximity to where the Turkish officials were meeting the Somali officials, the Somali counterparts in Mogadishu ahead of the planned visit by President Erdogan, it's pretty clear that that was an attack that was aimed at Turkish officials. And the reason is simple. The reason is basically because Turkey is a friend of Somalia, and any government or institute that's a friend of the Somali government becomes a target for Al-Shabaab.
Indeed. Turkey's president did say on Sunday that the flow of investments into Somalia would continue. But do we have any more specifics on, say, for example, what projects Turkish companies will be investing in?
Well, of course, Turkey has invested in Somalia from 2011. Actually, there are roads, hospitals, schools. Lastly, I think about 6 months ago, they completed a 200-bed health facility in Mogadishu that should also be a training medical facility right here in Mogadishu. But on top of that, what President Erdogan promised include 10,000 new homes for low-income Mogadishu residents. That's gross, according to what the people here are saying. He's also promised capacity building for Somali police, the army and the Somali Navy. And he's also saying the cooperation between the state TV, that is Somali National TV, and that of Turkey TRT. There will be close cooperation between the two, meaning there will be in terms of capacity building and rebuilding of studios, so to speak. Besides, he says his government will enhance sea transport, as well as the said Turkish Airlines will make daily flights. It now makes 4 flights in a week.
Indeed. Finally, Hirmoge, last year earlier in October, and I know we covered this in a little more detail, Al Bayrak, the company that now runs the seaport in Mogadishu, ran into quite a few problems with its workers and legislators as well. Have those problems been completely resolved now?
Well, Al Bayrak is the company, as you rightly put, that runs the Mogadishu seaport, and that problem was twofold. One was with the employees of Al Bayrak, and the other one, not Al Bayrak, but employees of the seaport, the Mogadishu seaport, and the lawmakers. But we understand the Somali government had signed an agreement with Al Bayrak to run the Mogadishu seaport. And actually, so to speak, the last few months, Al Bayrak had actually run the Mogadishu seaport. They have generated more income, and actually they have eased of cargo handling and cargo transport within the seaport in Mogadishu. But their problem was this. The legislators, Somali lawmakers, wanted this. They wanted to reform. They wanted a review of the contract between Al Bayrak and the Somali government so that conforms with the Somali laws and how the Somali seaport laws and that of the Somali constitution. As for the employees, there was a looming redundancy. Up to 5,000 people were to lose their jobs because Al Bayrak was to introduce a new cargo handling facility and high-tech handling facility in cargo offloading and cranes and forklifts into the seaport. But later on, they agreed, both parties agreed, Al Bayrak, the Somali government, and the legislators agreed that Al Bayrak will have to review with the ministry, with the line ministry, the terms of reference to that agreement so that conforms with the laws and what the Somali lawmakers are making. We don't have details of that. That was about 3 or 4 months ago, and nobody revisited that. But we understand the redundancy issue was never resolved because we understand all those people whose jobs had been on the line have been affected.
Indeed, we'll have to leave there for the time being. Thank you very much for that. That's Mohammed Hirmoke live in Mogadishu. We'll keep tabs on that story as it develops. Quick run through the markets here for you. Fairly negative start to the week for the Nigerian, the Egyptian and the Kenyan bourses. All of them were in the red. In some cases, in Egypt's case, by over 6/10. The only gains in the market so far today coming from South Africa, up by 0.9%. Fortune has listed Kenya among the world's top 7 investment destinations. We'll tell you why. And tourists are returning to the DRC's Kahuzi Biega Natural Park following the defeat of the M23 rebels.
This report by the African Green Revolution Alliance says climate change will slash food output. Within the next 30 years, the number of malnourished people in sub-Saharan Africa could jump nearly 40%.
Welcome back to the program. You're still watching Global Business Africa. Fortune magazine has ranked Kenya among the world's top 7 investment destinations to watch in emerging markets. Now, the magazine points to the country's ruling coalition's majority in both legislative chambers as being vital to advancing long-delayed plans to develop the country's power sector and national infrastructure. It also argues that measures taken to contain terrorist threats and a decision by the International Criminal Court to withdraw charges against the head of state, Uhuru Muigai Kenyatta, have boosted the country's political stability. Other countries on that list include India, the lone BRICS representative, and Indonesia. Malaysia, Mexico, Colombia and Poland are also included. Now then, over here in East Africa, Barclays Bank has also taken quite a keen interest in Chinese trade with Kenya. It's identified Chinese business investors as being key growth drivers for its business this year. The bank has singled out growing investments and opportunities for trade between the two sides as being extremely hard to ignore. The Bank of China and Barclays Bank have established a Chinese business unit, and they have unveiled a number of propositions designed to provide financial services for Chinese enterprises over here. China is the biggest foreign direct investment source for Kenya and the second largest trading partner after Uganda.
Over the last 2 decades, we have seen relations between Kenya and China grow from strength to strength. And today, China occupies a unique position as one of Kenya's most dependable and influential development partners. This partnership is particularly visible on the infrastructure front, where the collaboration between the two countries has resulted in some of the most transformative projects in the country's history. In fact, Chinese companies were involved in major infrastructure projects valued at estimated $2 billion.
In the wake of the defeat of M23 rebels, life is now slowly returning to normal in parts of the DRC's Kivu province, with operations resuming in one of its most visited national parks, the Natural Park of Kahuzi-Biega. And already some tourists are trooping in from various parts of the world, but this could be scuttled by renewed fighting if President Joseph Kabila insists on seeking a third term that could in turn give rise to an entirely new host of new armed rebel groups in the region.
The capture of the strategic town of Goma in Eastern Democratic Republic of Congo in November 2012 prompted travel bans to the region by the United States and other Western governments. This saw a major decline in the country's tourism sector, bringing to a halt operations in one of the most frequently visited national parks in South Kivu, Natural Park Kahuzi-Biega. But following the defeat of M23 rebels, life is slowly returning to normal and the park has resumed operations.
From the beginning of this month up to now, we welcomed 42 tourists, whereas I hadn't got any for the past 2 years. This shows that there is a development and a huge promotion of this kind of tourism.
Tourism is a source of employment to the locals, and the park's financial state is expected to gradually pick up as more tourists visit.
Those revenues are beneficial to the country, and the neighboring populations also benefit from them. As for me, I work in the park, and it helps in paying school fees for my kids. And it brings growth and improvement to the country's economy. Actors here are of utmost importance.
Jean-Michel Dubois, a Belgian tourist who's visiting the park, said he will also use the opportunity to create awareness among the locals on the importance of preserving nature.
We will make people aware one must maintain and preserve nature, because if the gorillas are captured and killed, at the end nothing will be left. This is important for the region and for the population's well-being.
With the return of peace in parts of Kivu, some domestic tourism is also set to grow.
You see, us Congolese, we pay $200 and foreign visitors pay around $400. We call upon our Congolese brothers to come and visit the park, to see what's happening in our environment and the job the conservancy workers are doing here. Another aspect I want to show is that we have a beautiful country. With everything, we must remain united. We must keep those assets we have so that even our children benefit from them, for this is a gift from nature.
But the gains made by the park now face a new threat as public discontent with President Joseph Kabila's government grows and threatens to plunge the country into renewed turmoil. The country's opposition and activists are opposed to Kabila's third term in office, which could easily trigger more fighting. Noel Makugu, CCTV.
Let's make a quick run through commodity prices here for you. Pretty much the same story we've had for the last week and pretty much the last half of the year. Crude oil still firmly below $50 a barrel. Of interest, however, is Angola. Cabinet has asked Parliament to revise the oil price assumption for its budget for this year down to $40 a barrel from an earlier forecast figure of about 81. That's a fairly interesting projection. Why? It cuts $14 billion of revenue, takes that right off the table for the budget this year. Coming up next, we'll introduce you to the Nigerian entrepreneur who's delivering fresh produce to farmers without the hustle and bustle of the Mile 12 market. A visit to Nigeria's Mile 12 market in Lagos can be, to put it mildly, a harrowing experience, given the congestion and the general disorder over there. And it gets a lot worse if you're not familiar with the place. But, as any good entrepreneur will tell you, chaos is opportunity just flipped around. More often than not, it does present a fairly interesting business opportunity. That's exactly what a young Nigerian woman has done, as Deji Badmus reports in this edition of Grassroots.
If you are thinking of getting foodstuffs cheap and fresh, then Mile 12 Market to my right over there is the place to come to. It's by far the most popular market in this city of over 20 million people. But there's one thing, as popular and as important as this market is, most shoppers would love to avoid it just for one reason. The traffic congestion around this area could be a nightmare most of the time. Navigating through the market itself could be a nightmare, especially when it rains. It's one of the busiest markets in Lagos, and things are far from organized here. Shopping in Mile 12 Market could indeed be a lot of stress. But the good news is that the stress is now avoidable, and shoppers can now get their items from Mile 12 Market delivered to them right at their doorsteps. It's all down to this young woman, Adedoyin Oshibanjo, who has created an online version of the market known as Mile 12 Market Online.
A customer goes online, places an order. When we receive the order, we contact the customer and we let the customer know when the item will be delivered. Usually it's next day delivery. And then when the order is shipped or when it's in transit, our courier guys, they call the customer to let the customer know that they will soon be with he or she. And the order gets delivered, they get paid.
Adedoyin has a team of 6 who work separately from their respective homes. Despite that, their operation is seamless.
Basically, the day starts from picking up the invoice and the procurement. We don't get to see because you don't have to see. The procurement people, they already have access to the back end. They know what is expected of them. So by 6 o'clock, they're already in the market, starting their day off. So, and then the drivers just go in there, pick up whatever they need to pick, and then that's it.
From 2013, when she began the startup, business has picked up.
Right now, referral is what's sustaining us. So, and I know that by the time we start like proper marketing and things like that, I'm expecting that our clientele base blows up to over 10,000 clients. And well, right now we need to be sure that we can accommodate that kind of thing before we go all out. I'm hoping that in the nearest future, this would be the whole of Nigeria, because I don't think it's just Lagos that's experiencing, or I don't think it's just for Lagosians. Everybody should have access to easy life. Nigeria is stressful as it is, and so the whole of Nigeria should be able to enjoy it.
Internet penetration remains a huge drawback for Mile 12 Market Online, but as more and more people get connected, prospects of better business rise. As for the traditional Mile 12 Market, internet or no internet, it is here to stay. Deji Badmus, CCTV, Lagos, Nigeria.
Right then, on the day when the Nigerian Naira hit yet another record low, that's it for this edition of Global Business. We like hearing your feedback on what we do around here. Global Business Africa at cctv.com is the email address to use. And of course, when we're not on air, Facebook and Twitter are your ports of call. I'm Raman Yang in the Kenyan capital, Nairobi. Thank you for watching.